Hello and welcome to this week's US Stock Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be discussing 5 steps to developing a watch list of stocks, and then I'll dive into the Dow Jones and our stocks of interest for this week. Now before we jump into the report, I'd just like to mention if you have any thoughts on investing, please comment below and be sure to subscribe to our channel to keep up to date when we upload regularly. Now let's get into this week's report. Learning to invest in the stock market is one of the most valuable life skills you can develop. It's also one that has the potential to make you money consistently over years if you have the right strategy and take the time to develop the skills needed to select the right stocks. But how do you select the best stocks? Well, surveys I've read by local stock exchanges suggest that most investors go down the hit and miss path to selecting stocks. They use newspapers, friends, chat forums, tipping newsletters, and more in an attempt to find the next great investment. The sad part is that for the most part, getting tips like this is very hit and miss. Now I could go on to explain why, but I think it's better just talking about what the right way is to find great stocks. I'm often asked by those who become sick of the hit and miss mentality how to develop a watch list of stocks to invest in. So today, here are my 5 steps to developing your own watch list. Now the first one is set your criteria, or in simple words, what do you want to achieve? Now if you were to go on a holiday, the first step is to decide where, and then you just work out how to get there. And the same applies to your portfolio. The first step in developing a watch list is to set your criteria for what you are looking to achieve. This includes determining your portfolio type. Do you want growth, income, or a combination of the two? Do you want high growth or steady growth? What time frame are you looking at with your portfolio to achieve the goals you desire? Is it 1, 5 or 10 years? Understanding these areas will help you understand what types of stocks to invest in. Finding stocks is not about looking at lots of stocks with the mantra, the more the better. It's about looking at the right stocks for your portfolio goals. Believe me, less is better than more in this case. Different stocks have different personalities that suit different styles of portfolios. Understanding your why helps you concentrate on just the stocks that suit you. My next tip is invest in what you know and understand. Often investors make poor decisions because of a lack of knowledge. Investors generally have a poor process for selecting stocks. Given this, it pays to invest in what you know and understand. Now, if a company operates in an area you do not understand, stay away from it. All too often, investors speculate in stocks in areas they simply do not understand because they've gotten the impression they could make a lot of money from it. Now, every week I hear stories of poor portfolio performance from people who invest in what they do not understand. We've seen this recently in Bitcoin and in rare earths. Number 3, just do some top-down analysis. So this third step is to conduct top-down analysis, and this means to find where the money is flowing by looking at the best performing index in the market. Then look at the best performing sectors within that index, and finally look at the best performing stocks in that sector. Here's a tip, also look for stocks in that best performing sector that have not run as fast as others in that sectors, as they may start to play catch up, and if they do, you're going to be ready. Number 4 is pick good stocks. Not just any stocks. Now this point sounds very obvious, but how do you do it? After conducting a top-down analysis, you may have many stocks in your watch list. Now you need to get into the criteria for the ones you wish to buy. Now this could be a fundamental screen, such as using PE ratio, dividend yields, and EPS to name a few. You may also apply some technical analysis to the charts of the stocks to determine the trend and strength of the direction. Now I suggest you do both, as then you will find fundamentally sound stocks that also have a better than average chance of rising after you purchase them. Here it pays to be more detailed. Number 5, do the work. The 5th and final point to developing a watch list is really to put in the required work, and it seriously does not take that much time. A watch list of stocks is a fluid list, meaning you will refine it constantly as the market changes. Managing a good medium-term portfolio of any amount should only take a few hours a month to do properly. Read up about the market, but be very selective about what you read, as you'll want to be more concerned about the quality of the content and not the quantity of the content. Too much leads to confusion and poor decision making. Now here's another tip. There is no real ideal amount of stocks to have on your watch list. However, I do suggest you keep your list smaller rather than larger. Now I suggest those new to the market only look at the top 100 stocks on the marketplace. Let's get into the charts now. Okay, let's get into the weekly chart of the Dow Jones Industrial Average, and this is the same one you've been seeing for a few weeks actually, with those that sort of what I would call a rising flag-ish pattern. Now last week here I was expecting, I thought it was possible for it to move back down and come back through this, because that last bar there as of the weekend in the 20th of July did look a little bit of indecision in the marketplace, given it really opened and closed down there its low. But last week, which is the week ending the 27th of July, it really did power through, actually opening at 25.0362 and then to close at 25.451. So huge week, really nice strong week. So it's now broken that 25.402. It did break above that and also closed above that level, which was another interesting thing. So if I use my little crosshair tool, you can see here how it's way above that, and it's way above that sort of resistance now around that 25.390, 25.400. It's really above that now, so I think we're probably going to see some more upside on the Dow at this point in time. How sustainable that is, that's another question. Why didn't that turn off? Click off. How sustainable it is, that needs to be seen. At this point in time, that more recent low there is obviously the low of a significant low for a period of time, being the 23.344. So at this point in time, I think with the next levels of resistance here on the market, we're looking at that 25.800 is the next level of resistance, and obviously moving through to that 26.616 at this point in time. So let's have a quick look at the monthly chart. I always like to go back to the monthly chart and look at things on the monthly chart more so than anything tighter than that. And this is one of the big issues that a lot of traders have, is they continually look at daily charts and possibly weekly charts. So they actually don't look at the big picture to see how this is unfolding. And if you look at the whole history here, you can see here I've got data way back. If you look up at this area, why does that keep popping up? I've got data here back to 1900 on the Dow, and you can see here how it's really powered on over since the GFC. And what I know is that markets overheat, and then they do exactly the opposite. And looking at world markets, the Dow has been pushing really hard over the world markets over the last few years, and it's going to slow down, and I don't think it's going to be too far off. I think it will start to slow down, and other world markets will start to get better returns than that, and I know it's going to happen because obviously you can see how more vertical it is. Now right now the all-time high is at 26.616. It's been going at a much steeper angle than it had before. So you can see here the angle of that. And if I do, let me just look at this one. I'll just whack here. So let me just put it onto the 1987 low. That's where that major crash is. And you can see here how it was running along this line that's called the 4.1, and it's going above it, finding support and resistance and coming out. Now it's going a lot more vertical in terms of that. Now if I use the same tool, if I just delete that tool, I just clicked off it. Now if I delete that tool, and if I go and put it on again, but now I'm going to put it onto the 2009 low, you can see the difference in speed. See, there's that 4x1 line through here, and here's that 8x1 line that was shooting right up through here. So you can tell the speed is happening at a lot faster. It means the price of the Dow is running faster. There's more points growth per day than what it was for the period prior, and so that's showing to me that the Dow is running a lot harder than what it has been in the past. So eventually it will slow down. So I don't expect the Dow to be spectacular rises and get spectacular rises over the coming year. I suppose that's really what I'm looking at here. I wanted to talk a little bit about reporting season, because there is reporting season at the moment, and there's a few stocks recorded. Reports, Apple is one of them, and so I know we have looked at Apple a few times. A couple of times over the last few months, because it's just a great stock to look at. And you can see here the reporting season really hasn't had much effect on this stock. And if I just drag that out so I can bring that up a little bit, if you look at stocks, you see how they will always travel on a certain momentum. So if I put my little trend line tool, you can see here how Apple runs along this momentum. You can see it's running all up around it here, up, comes back to it, moves up, comes down below it, comes right back to it, goes below again, and comes right back to it again. So it is traveling on its momentum. How far can Apple go? I mean, really the sky's the limit, but at this point in time, I don't really see that there's going to slow down too much, but at this, it is hard to tell. And right now you're in blue sky. So if you are an Apple shareholder, there's no reason to get rid of it. It's looking quite nice and bullish, and it is looking sustainable because unlike the Dow, it's running along its pretty much its normal momentum. Now, we could go back and look at its momentum through here back in those days where, it wasn't a very good stock to own, when it was down $1 before Steve Jobs come back. And to me, really that sort of time since the GFC has been a really good time for Apple, and it's showing you what it can actually do in terms of a stock. So it's looking really, really good. Next one I wanted to have a bit of a look at was Facebook, because it's been in the news lately again, because it has been reported, and last week it fell heavily, as you can see here. It was a massive blow to Facebook in terms of how much it fell, and we can see here if I put my little tool on here, at one stage it was down 21% and it closed at around nearly 20% down. That's a huge fall for a big stock like this. Now obviously it didn't fall that much from its open. That was its open at 193.37. So it remains to be seen. I don't think there's going to be too much trouble with Facebook. I think it's just a bit of an overreaction on the marketplace. Again, if I use my trusty little trendline tool, the trendline tool is a momentum indicator that measures price over time. And it's a lot of people undervalue this tool, but you can see here how Facebook's just trending up normally. It really is trending up normally, and it's just gone through it. It come back to it, and I think it's just going to find some support and keep going back on its merry way again. So to me, there's really nothing to be worried about with Facebook. This could just be a really nice opportunity to pick it up at a cheaper price than what it was at before. So Facebook is looking good. Let's have a quick look at the weekly chart of Facebook, and you can see here that move looks a hell of a lot more dramatic on the weekly chart than it did on the monthly chart. And again, that's sort of why I use the monthly chart, but you can see how, again, it's a nice trending stock. It just plods along, and it's really nice in terms of how it unfolds. If I put a little tool on here, let me just scroll that back a little bit so we can look at how it actually unfolds, and I'm just putting it on here, and you can see again it's just blown below it a little bit, but it just runs nicely. It just runs beautifully. So to me, if as long as it stays above this low here of 149.02, I think there's no reason why we couldn't see Facebook continue to move up. Next one I want to talk about is Twitter. Interesting stock, Twitter, isn't it? And looking at this, I've only got data. It's fallen to a heavy low back in May 2016 at $13.73. It's been a little bit bullish. It did what a little dead cat bounce here down into a low of 14, whereas at $14.32 here, and moved up into 47. So it's had a beautiful little run here, but at the moment I think it needs to slow down a little bit. It's gone a bit too fast. So if I keep on with that same theory of my little trendline tool here, looking at the momentum, let's say here's the momentum through here, and you can see a peak here and a trough here. It's just going back to its momentum. Stocks do overheat, and then they'll come back to what their intrinsic value is, all their longer term momentum. But I wouldn't be too worried about Twitter at the moment. As long as it stays above that green line there, then I think it's fine. If it drops below it a little bit, then it's not too bad. But I mean, there's a reasonable amount of movement between those 2 points. From obviously last week, you can saw a 24% move. If it goes to that's 36.37. That's huge. That's way too much to lose in terms of that. So really do need to be looking at your entry and exit rules on that, and making sure that you are looking after yourself in terms of that. If we go back to the weekly chart, looking at this, there's an exit signal for me, definitely an exit signal for me in terms of my buy and sell rules. But again, if I do a slightly steeper one, you can see through here, there's a nice trend line. If it closes below here for 2 weeks in a row, then I would be exiting Twitter. I wouldn't be hanging on to it. And last one I want to talk about is Snapchat. It's a Snap, S-N-A-P. Different. This one's more bearish, this stock, and you can see it's quite volatile here. But to me, it's more of a bearish stock in this point in time. There's a lot of support and resistance around here. If I use my little tool here, you can see here support through here. At around $11.27, there's a lot of resistance and support around $13, a little bit around $14.40, and around $16, $17. But at this point in time, it does look more bearish than bullish. And what I was talking about with my trend lines in terms of being bullish and bearish, the same works in reverse. So you'll see downtrends, and generally downtrends are a little steeper than the uptrends, but not necessarily always the case. But at this point in time, if it doesn't, it's made some lower peaks and lower troughs. So right now, I'd be worried about whether it went through that $10.33. So just be careful if you do own Snap at this point in time. If it starts to break through this level, then I'd be looking at saying, okay, well, it may be a nice little buy. So it's sort of in that little point where it's not bullish, it's not bearish, or super bearish, but it looks more bearish. If you look at it in terms of weight of scales or a pendulum, the weight or the pendulum swinging more to being bearish. But if it does close strongly above that 14.47 and it breaks through that line there, I think it might be a nice little opportunity. And if it doesn't, if it keeps falling away, then I would say that $10.50 low is in danger of failing, and it's going to go further down. So that's it for me for this week. Hope you've enjoyed my take on the stocks. Take care. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.